Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host. I'm Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamilton here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. So, Sandy, today's topic is a pretty hot one. Is Canada's housing market heating up?
Absolutely, Steve. There was a noticeable slowdown earlier this year, but it seems like things might be picking up again. According to the Canadian Real Estate Association, national home sales fell by 4.8% in March compared to February. However, there was a slight uptick as we moved into the spring, with home sales increasing by 4% in May and 3% in June.
That's interesting, Sandy. Despite the increase, there's still a lot of economic uncertainty. US-Canada trade tensions and a shaky job market are significant factors that could keep the housing demand and prices subdued. It's worth noting that exports to the U.S. were down 14% as of May compared to the previous year, which adds to consumer hesitancy.
Right, and this uncertainty is particularly affecting regions like British Columbia and Ontario. TD economist Rishi Sondhi mentioned that while there might be some improvement in sales levels, they're likely to remain below the peak levels we saw during the pandemic. It seems the prairies might experience firmer price growth due to a tighter market there.
Indeed, Sandy. In Ontario and BC, there's too much supply and not enough demand, which often leads to negotiated prices. Condo prices in the Greater Toronto Area have been declining and are expected to continue doing so, with a forecasted drop of 15 to 20% from their 2023 peak by the end of 2025.
That's a significant decline, Steve. But there's a silver lining. If the Bank of Canada decides to cut its lending rate again this year, it could provide a modest stimulus to the market, especially for variable rate mortgages. Sondhi suggests that this could help bolster some segments of the market.
And looking ahead, Sondhi expects stronger growth in home sales and prices in 2026, provided the economy improves and uncertainty diminishes. However, affordability remains a challenge, especially in key markets like Ontario and BC. Although, the decline in condo prices in the GTA could improve affordability and potentially boost sales.
Yes, Steve. While the market might not return to the record highs of the pandemic, it seems like we're on a path to a more balanced market as we move into the latter half of 2025 and into 2026. It'll be interesting to see how things unfold. Now, let's shift gears and talk about the Bank of Canada's upcoming lending rate announcement. This is always a hot topic because it has significant implications for the housing market and the broader economy. The Bank of Canada is set to make its first lending rate announcement of the year on January 29th.
Right, Sandy. According to TD economist James Orlando, there's a strong prediction that the Bank of Canada will cut its lending rate by 25 basis points this time. That's a smaller cut than the 50 basis points we saw in December last year.
Yes, Steve. If the central bank follows through with this cut, it would bring the overnight lending rate down to 3.00%. Orlando points out that this smaller cut reflects a more cautious approach, given that we're currently in a neutral range that neither chokes nor stokes economic growth.
And it's interesting to note that while the interest rates have been high in the past few years, we've seen a recent uptick in consumer spending. The latest Statistics Canada job report showed that employers added 91,000 jobs in December 2024, which suggests some economic resilience.
That's a good point, Steve. And when it comes to the impact of a rate cut, Canadians with variable rate mortgages could see more of their payments going toward the principal rather than interest. That's always a welcome relief for mortgage holders.
Absolutely. But it's important to remember that for those with fixed-rate mortgages, a rate cut might not have an immediate effect. Fixed rates are often based on 5-year bond yields, so the impact isn't felt right away.
Exactly. And while TD Economics is predicting a rate cut, there's also a possibility that the Bank of Canada could decide to hold its rate. Orlando mentions that the resilience of the Canadian economy could justify a rate hold instead.
That's true. And with factors like potential U.S. tariffs under President-elect Donald Trump, the bank might want to take a cautious approach. These tariffs could impact Canadian exports and, by extension, economic growth.
And let's not forget the upcoming December 2024 inflation report from Statistics Canada, which will be released just before the announcement. If inflation has stabilized around the 2% target, it might not heavily influence the decision.
Right, Sandy. TD Economics predicts that by the end of 2025, the Bank of Canada might cut the lending rate by another 100 basis points in total, potentially bringing it down to 2%. This could ease some of the economic pressure we've seen when rates were around 5%.
Well, it sounds like we're in for an interesting year ahead in terms of monetary policy and its impact on the housing market. We'll have to keep a close eye on these developments as they unfold.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.